Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. You brought up Celsius to me maybe a year ago, and you're in Florida. I'm in Minnesota. I don't think that we have the same distribution of some of these things. But one of the things we talk about a lot is coming up with ideas and how do you come up with investment ideas. And it seems like some of these things are just out right in front of us. And the things that you're buying or your wife buys or your kid buys, just allocate some money to that. I was trying to think through the history. I remember having a conversation with somebody who was very into fitness this would have been, 2007, maybe 2008. And she was talking about Lululemon. I'd never heard of Lululemon. And I looked up the stock. I was like, this stock's trading for 100 times earnings or something crazy like that. And that would have been a great investment. Yeah. My dad called me like Nike kid or something like that when I was in like junior high or high school. Man, if I would have bought Nike stock and just held it from 1994 to today, that would have been an amazing investment. I think I had some shares at some point back then. But I find that interesting. I don't know if you have found the same things. It's almost like if you look back and go, man, when we bought this as a family, or I saw this product starting to show up, Crocs is one you followed recently. That's almost a better way to come up with ideas than like doing some sort of newfangled analysis on financial statements.
I think it is more beneficial than perhaps finding new investment ideas through a stock screener.
Yeah.
Because the stock screener is just not going to tell you all that much. You can look for certain aspects, operating margin or whatever. I want it over 20%, but you're just not going to find trends that way, I don't think. And yeah, it is really interesting when you look at the consumer. I guess that's the downside, right? Not all good investments are consumer facing.
We've seen this in software too. You see a piece of software start popping up all the time. And I remember the Motley Fool started using AWS in 2012, maybe. And I started seeing this S3 thing and I thought was weird. Why not just use Dropbox? Turns out AWS was the way to go. And actually Dropbox was built on AWS. So this is one of those trends that seems to happen over and over again. Morgan Housel did a podcast recently where he was talking about the arbitrage in the market through something like the 80s or something like that was just processing data. Yes. If you were reading a newspaper and had to go down to your local library to get SEC filings, it was really hard to get all the data that you needed to make an investment thesis, much less like, how are you going to do that with 100 companies? Only somebody like Warren Buffett could do that because he's working 24 hours a day and thinking about this 24 hours a day. Whereas now all of that information is at our fingertips. You can do a screener, like you said. And the alpha, the differentiation that we can have is almost more human psychology. That's what he talks about a lot is, can you spot these trends? And that trend of the last 6 months has been artificial intelligence. Well, Stanley Druckenmiller, of all people, spotted that ahead of time because he's seeing macro trends and investing ahead of them. I think it's one of those lessons that I keep learning over and over again, that when a brand that ends up being a public company starts popping up, I should pay more attention and forget about my financial brain because there's probably something else going on there that I don't have incorporated in the stock yet.
Yeah, Buffett actually, he talks about that. He's like, when I was starting out, literally just by grunt force, he could read more financial reports than anybody else, and you could find the ones that were trading for pennies on the dollar that were there, just no one else had the energy to go out and find them like he did. And he says that doesn't exist anymore. And if he was starting out, he wouldn't have that same advantage. I think it's a valid point.
Yeah. So the lesson is, don't complicate things. See what kind of things you're buying, what kind of things your family's buying, your friends are buying, your kids are buying, because that's going to tell you a lot about where we're going in the future. What do you think? Leave your comments in the comment section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody. See you here next time.